Hey guys, so you've probably heard about this Silicon Valley Bank going under, and now there's speculation whether the FDIC is going to step in and bail them out, and also whether there's going to be spreading contagion to the banking system. So, just very briefly, what happened here is that normally a bank has your deposits, and those deposits, from the bank's perspective, are debt. Okay, and then the bank also has loans that it put out. So in the case of Silicon Valley Bank, and these are rough numbers just to kind of give a picture. So in their case, they had something like 210 billion in deposits, and then they had more than that in loans, so something like 230. All right, that would then give something like a $20 billion gap. Now that gap is called their equity. Okay, so if they had 230 in loans out, okay, in other words, in assets, and only 210 in deposits, then that 20 billion, you divide that by the 210, and they'd have something like a 9% equity ratio. So you would say, okay, good, they're in business, they're worth more than their debts. Now, what happened is that a lot of their holdings were in long government bonds, meaning government bonds that go like 20 years. And over the past year, those government bonds have lost value, okay, because interest rates have come up so quickly. So what that meant is that rather than being at 230 billion in assets and something like 210 in deposits, the assets came down. So now there's something like 200 billion. All right. So at that point, they are bankrupt. They're out of business. Now, what happened, or what the sort of bank champions are trying to push, is they wanted the government to step in and essentially rehouse Silicon Valley Bank by passing it over to one of the major banks on Wall Street. And so that's the big contention. That's what the Wall Street banks presumably would have preferred. They could have picked up this reckless bank for a song. But in fact, now a lot of people are worried that the government missed their chance to do that, and that at this point there's going to be more contagion. Now, the question I think for a lot of people at this point is this going to spread, right? Is this going to bring down the entire banking system? And the issue here is, how unique was Silicon Valley Bank? So Silicon Valley Bank was very widely respected. It was a prestige bank in Silicon Valley. You sort of hadn't made it until you had an account at Silicon Valley Bank. And in fact, they would blow off small depositors, right? So if you were like a brand new startup and you reach out to Silicon Valley Bank, their attitude would be, you're small fry, come back when you're bigger. That means that almost none of Silicon Valley's deposits are actually covered by the FDIC, right? The FDIC is the government sort of bank insurance program that covers your bank account if your bank fails. They only go up to 250,000. Almost all of the money at Silicon Valley Bank, which is on the order of 210 billion, almost none of that would be covered by that little tiny slice there, right? So there are a lot of Silicon Valley companies now where they can't, if this doesn't get resolved quickly, then they can't make payroll, they're going to go under. Some of those companies are Web 3.0 startups that do payment processing. Okay, so then you get this cascade effect where any company that's relying on them is now in trouble as well. And then, of course, the wider issue here is that what brought Silicon Valley Bank down, yes, it's true that they're in Silicon Valley. They've got a lot of tech customers. Tech has been hurting recently. But the underlying problem, right, what caused that 230 to go to 200, that was almost all from government bonds losing their value. And so this is going to be true for every bank in America to more or less extent. So Silicon Valley Bank might have gone first. It might have been the weakest gazelle on the savannah because it had all this woke stuff on it. But almost every bank in America is going to have these kinds of risks. And so really, I think there's a good chance that we're at a Lehman moment here, similar to what happened in 2008, where the government has to decide if they're going to bail out a bunch of crony billionaires who've been operating fractional reserve and ripping people off, or are they going to stand back and let it collapse? George W. Bush let Lehman go down. That shocked Wall Street. It scared them. Okay. If regulators don't step in and bail out these cronies, then we could see a pretty frosty week next week. All right. See you guys in the next video.